Closing beat, everybody. Happy Wednesday to you. How you doing out there? Good, good. Hope you're having a good day out there. This is a quick show that we do called The Closing Beat, and we'll go over the stock market, the good, the bad, and the ugly. Hope you enjoy. Basically, we'll go over all the good stuff today. And we're playing a game, by the way. It's called Guess the Dow. If you want to go to the website, jazzwealth.com/guess the Dow. If you can guess where the Dow is going, you deserve it. Our winner, of course, would deserve it. You just got to be the closest without going over. We'll send you a $100 gift card if you are not a customer. And if you are a customer, we can credit your account $100. So take your shot. Let's see. You deserve it if you can guess where this Dow's going to finish at the end of the week. So enjoy that. Our jazz artist of the week is Dave Weckl. He's a drummer, probably one of the better drummers on the planet at the moment. And he did a song called The Chicken. It's not his song, but he did the song. You want to watch somebody just literally tear it up. Then that's the one you want to check out. Dave Weckl, The Chicken, if you want to see that. Hey, happy March 4th to all of you out there that are drum corps fans. March 4th, be with you. Enjoy. So I wanted to point that out to you. Also, keep in mind, if you schedule a call to chat with us, I can't give you advice, right? So whoever you speak to, we can't give you specific advice. We can help you understand how we work here and everything, maybe point you in the right direction to open up an account, but we can't give financial advice. We get in a lot of trouble for that, and I'd like to be on the record for the SEC saying that we will not give you financial advice because they don't like that. We get in a lot of trouble for that. Anyways, let's talk about the stock market today. We got the Dow higher by 1,173 points, the S&P adding 126, 334 on the NASDAQ. The Dow outperforms the S&P today. The Russell was the underperforming area of or index there, and nothing changed with the virus. Actually, it got worse. So if you're looking at the virus stats all around the world, we did share that with our customers last week. We'll probably add some of that into our class tomorrow, but nothing changed. All of a sudden, everybody goes, well, I guess because Biden won, that means healthcare is going to be expensive forever. Bernie Sanders didn't win, can't get rid of that or put price limits on there. That was what he wanted to do. And so he is the presumptive nominee at the moment. We'll cover some stats on that in a little bit. And so because of that, you get... well, and some other things as well. You get a wild range here. Here's the S&P 500 back to the high of the range that we talked about yesterday, where we'd be landing there. And the Dow back to the high of the range as well, and also back to the top of the previous uptrend there, known as resistance. So you can understand why that is where it's at. I put that on that line on the chart to share that with you. So that means we had 1,294 points to the upside on Monday. I missed the day. The stock market yesterday Dow loses 786 yesterday. And because I missed Monday, it gave me a chance to see a real strong day there. 1,173 points on the day. That also puts your NASDAQ positive on the year now by about 0.5%. So looking pretty good there. The big news of the day, of course, was the healthcare rally. That led the stock market higher there. Joe Biden did win a lot of the states out there. A couple upsets, well, I think a lot of upsets if you ask Mike Bloomberg, but a couple other upsets out there. And he takes the delegate count. And so he is at the moment the presumptive nominee. I don't think Bernie Sanders gets out at the moment, but that led healthcare stocks higher, which then with that helped the whole sector, of course, move higher. You also had our services number come out better than expected, so no issues there with the virus. You had private payrolls also better than expected, no issues there, at least at the moment. And you got about $8 billion or so coming out from Washington to help the virus. So a lot of positive news just all in one day. It doesn't change anything about the virus. It just changes the sentiment around there, making people go, well, all right, maybe I can buy this market and take advantage of this dip. You keep in mind, there was 5 new cases in New York. I mean, Italy's a mess. They're canceling school for the rest of the next 2 weeks, I believe. And all sporting events are going to be played without fans. That would actually be kind of cool to watch, I think. So nothing good really happened there. But we got a little bounce today, so no complaining on the bounce there. And like I said, we're back to the top of the range there. The S&P 500 has now had a 1% or greater move in the last 9 trading days. This would be day number 10. Another 3.1%. Let's see here. Yep, another 3.1%. That put the S&P positive year to date. Doesn't obviously put us back to highs, but it puts it positive on the day, or year to date. The NASDAQ is positive by 0.5%. Now, contrary to yesterday, where I pointed out the number of stocks in the S&P that lost more than 3%, and then those that lost more than 2%, we got an immediate reversal today. 272 names higher by 3% or more, 380 higher by 2% or more, and not all good news, though. The bond market actually was higher most of the day, despite the markets being higher as well. So that was kind of a little bit of a alert there that the bond market was still giving us. But by the end of the day, it did sell off. And I want to point out, if you are a bond investor at this point, and actually any point here in the recent past, you essentially guarantee yourself losses, right? I mean, it's the only time we can really use the word guarantee is if we can guarantee it. It's a bad word to use in the financial services space, but if you're investing in bonds and you're investing for yield in bonds, you guarantee a loss, right? You get a 1% yield. Inflation, let's say, is 2%, right? You're holding these bonds. You're losing money by doing that. And that's what the Fed wants. They want you to be in there investing. So, awesome. That's what you want to do. Kind of forcing you into the stock market. All right, we also had refinancing numbers come out. I expect these to get better, but check this out. Here are the U.S. refinancing. We saw a big spike quarter over quarter, back to the 2013 area where we had, I don't know if you remember taper tantrum. Remember that whole deal back there with the Fed? So mortgage refinance is high. You got interest rates obviously super low, and that's a sort of a backward-looking report that we get here. So you expect that to spike even more. Why is that good news? For those of you that are bullish on the overall economy, it means that if you refinance your home and you do it and you have a lower payment, that makes sense for you. That means you have more disposable income. You're likely to go spend that on something maybe you shouldn't, which is good for the economy, helps people go out and spend a little bit more money. If you got cash in your pocket, you probably want to burn it. I'll just overlay here the 30-year mortgage rate. It's going to be a little lower today, but let's back out the mortgage refis there. And if we just zoom in a little bit, you can see we're sitting right near lows here for the 30-year mortgage rate, national mortgage rate, by the way. And the data is a little behind, so it's actually going to tick lower by about about 0.2 of a point today. So really, really interesting out there in terms of refinances. I fully expect that people, because I get this question all day long from customers. I'm thinking about refinancing. There's a no-fee refinance. My bank's offering refinance. I save 1%, although we never think you'd save that much. And so it makes sense. There's a lot of people asking questions about that. All right, let's go through here and take a look. In the Dow, you've got the leaders today. United Healthcare, the biggest mover. It had this best day since like 2009, so over 10 years ago. 10% upside day, 10.72 to the upside. You're also going to have Pfizer in the mix, adding 6% on the day. Johnson & Johnson stands out in the Dow as well with about a 6% gain on the day. Weakness on the other side, which really wasn't horrible. Boeing added less than 1%, so that's relatively weak overall compared to the overall stock market. Then you got the banking stocks in there, which did rally as bonds started to fall at the end of the day. So these do stand out as like towards the weaker side, but they did kind of make up ground in the last part of the day. You got JP Morgan in the mix, and then Goldman Sachs is the other one in the Dow there, 2.6% gain on the day. In the S&P 500, it's going to be a lot of the same today. We're going to be mentioning a lot of the same here. Anthem, gain of about 15% there. Humana, gain of, let's call it 15% as well. Cigna, UNH, all of them did well. Double-digit gains on the day. Those are your leaders in the S&P 500. To the downside, it's going to be energy and retail. Halliburton, 3.5% to the downside. Oil didn't participate today. It lost 1%. We'll cover that in just a moment. Helmerich Payne was one of the weaker ones as well. New 52-week lows. Lost 1.6%. And then you have your second-tier retailers. You got Kohl's hitting 52-week lows, losing 2.5%. Dollar Tree was in the mix. Did it stay? Yep. Stayed near lows, 3.5% on the day, and new 52-week lows. I said that already. Nordstrom down 1.6%, although that one did close off of its lows, but that's going to be earnings related there, and those are your weak ones in the S&P 500. Sector-wise, you had every sector in the S&P, all 11 sectors, gain more than 2% on the day. Semiconductors or tech, I will look at this subsector, but you look at semiconductors, they had one of the better days, 5.13% on the day. I'll point out Micron, that one stands out, and AMD, that's kind of an analyst favorite right now, 7% higher on AMD. Healthcare, we got to point that out, right? XLV we'll use to check that out, 5.75% to the upside. That's the Biden momentum, right? Sanders, obviously, a little weakness there, so that stands out. United Healthcare, we happen to own this one, happy to see this one. This is our best performing stock in all of our portfolios today, adding 10.72%. But then you also had Cigna and Anthem. Those stood out. We don't have to go through those again. Home builders did well. This whole home building area of the market. Now, this is not all home builders. This one's a little misleading. These are the home builders, but this also includes things that support home builders. Your Home Depot, Lowe's, your carpet manufacturers, your paint, Sherwin-Williams, things like that. They all did really well. in that space, naturally with some of the economic news coming out, as well as lower interest rates, right? Expected to do well. Utilities lower on lower interest rates as well, 5.67% there. And REITs, you might expect them to be doing well, back above the 200-day moving average, adding 4% on the day. That's all going to be rate-sensitive areas of the market. Consumer staples probably gets the award for the fastest snapback so far of all the different sectors in terms of getting back to its highs. It's almost there. How much further do we have to go here? Let's take a quick look. So from where we're at to highs, you got a whole 2.5% higher, which would put consumer staples back at record highs. That's pretty impressive. Some of the standout names in that area include Colgate. CL is a ticker symbol, added 5% on the day. Kimberly-Clark also hitting, well, that almost hit 52-week highs, but that added 5% on the day. And I thought Costco stood out a little bit as well, almost back to their highs with a 6% gain on the day. Tech, we just talked about that, very strong, had a good day, 4% gain. Micron and AMD stand out in this category as well, if you want to look. Financials, they've been lagging behind a little bit. They don't like the low rates, right? It doesn't help them. 3.3% to the upside, although that came later in the day. They were weak most of the day there. Financials and then regional banks as well, which have more which are more sensitive to lower rates, right? So the bigger banks out there, like that are in the XLF, if you want to look through the top holdings there, they're not as affected because they have other divisions, right? They have investment banking, they have, well, they do loan money as well. They also have trading divisions, right? So those companies can kind of weather lower rates. If you look at the regional banks, the lifeblood of their business, it tends to focus more around, at least a greater percentage, around loaning money out, and so lower rates don't really help them. As I pointed out, oil took the day off in the over the regular session there, lost 1% on the day. It did recover a little bit. You've got OPEC reporting tomorrow. I thought this was interesting, by the way, if you happen to notice. So it's kind of like a trending thing right now to take a video of yourself kicking feet with somebody. So instead of shaking their hands and getting the virus and panicking and all that, you like tap your foot to the other foot there. And so at OPEC today, I think it was the OPEC second minister, they actually tapped foots with this other guy. Who was the other guy, right? This kind of disheveled looking guy there, not to make fun of him, but that's what he looks like. Who was that guy? That guy was the translator for the Russian ambassador, right? So what does that tell you? The meeting hasn't even started yet, and Russia's already there talking with OPEC. So that's good news, right? And Russia said they were going to accommodate anyways. That meeting goes on tomorrow, and then the OPEC Plus meeting will be the day after, I believe. And that's a little weird because it's like kind of overnight, so weird how it works. But basically our time, it is tomorrow. Also, the price of gold pulled back a little bit today. I had a big day yesterday, so a little bit of a quiet day for gold. People not sure they want to bail just yet, but there's no reason today to be sort of fearing the economy, fearing the market. So not a big move there. That is your sector update for the day. Let's take a look at some individual stocks here. Your travel stocks finally got a little bit of a bid. Carnival Cruise up 2% on the day. Royal Caribbean was also higher, 1.5%. Remember, these haven't participated so far in the bounce that we've seen on Monday as well as today. So they finally started to kind of pull around here. American Airlines and all the airlines in general had a good day. In the transports sector, rails also had a good day, if you're curious. So you got American Airlines up 3.8% on the day. Delta Airlines also did well. They all had a meeting at the White House with President Trump, giving an update on that. United Airlines, maybe the underperformer, still had a good day, 2% to the upside. They are reducing their international schedule by 20%. And they're going to fly less routes. Well, they're going to fly the same routes, but they're going to fly them less often. Let's put it that way. Domestic schedules reducing by 10%. All of this is going to happen in April. So if you have a flight booked on United Airlines in April, you might want to check because you're probably going to get your flight changed there. They're also going to offer their employees an unpaid leave of absence. They think that a lot of employees are going to want to take that opportunity. And they're doing a hiring freeze. Previously, they were doing a hiring freeze on pilots. Now it's all across the board, hiring freeze for them. I'd expect maybe you see some other airlines start to go along the same path there. Couple other stocks here to look at. GE was up just a little bit. They said the virus is going to cut into their free cash flow by between 300 and 500 million. It's a $200 million difference there, but that's their best guesstimate at the moment. They still said that they expect to meet their full guidance for the year, so the stock really wasn't hit too hard on that news there. Chipotle up 4.5% on the day. They were upgraded at Wells Fargo. All positive comments due to the, have you seen the Chipotlanes at Chipotle? I think it's only like a dozen stores, mostly in Texas at the moment. The new stores that they're building has like a drive-through. kind of, essentially, yeah, it's a drive-through. I mean, that's basically what it is. The catch is you have to order online. You can't pull up in the drive-through and order. I don't know how people are going to figure that out because, you know, if I see a drive-through, I might go to the drive-through, but you actually have to order online or on the mobile app, and then you can go pick it up in the drive-through. You get like a scheduled time to show up, and you do that. Anyways, Wells Fargo was excited about that. They said that that's going to help further drive their mobile sales and probably bring a whole lot more business there. So if you have Chipotle, great food. Now maybe hopefully great stock. All right, Beyond Meat's up 6.7%. They got an upgrade at Argus, $130 price target. Let's go over to the screen there. 130 bucks puts you back at these prior highs here. So they're basically saying Beyond Meat is going to get back there. They expect to see growing demand for plant-based products as people look for the sort of meatless alternatives, but also as the sort of climate change people out there decide, hey, we got to do something about general, global health and all that. So they're expecting Beyond Meats to do well there. So we'll see what happens. Campbell Soup, new 52-week highs. That's awesome. We happen to own this one, so excited to see this one higher, 10% higher. People, so they beat on earnings. We all know their earnings overall beat by 6 cents. Revenues as expected. They raised their guidance going forward because they said, you know what, people are stocking up on this chicken noodle soup, man. They're scared that they're going to have to stay home and eat out of a can, and so they're starting to see higher sales of overall canned goods. I don't know if I have any canned goods just sitting around the house. Do you do that? Do you have any canned goods ready to go? I know my daughter would be so frustrated if she couldn't go out of the house. She doesn't eat at home. She goes out to eat every freaking meal. So if she had to eat out of a can, boy, you'd have some pretty frustrated Gen Ys out there. Is it Gen Y? Gen X, Gen Y, something like that? Anyways, those are some of your stock updates on the day. What do we got? Urban missed their earnings expectations. Ross basically came in as expected. Nordstrom missed. We covered that yesterday, I believe. And Abercrombie & Fitch beat by 8 cents. They did lower their guidance going forward. Let's see what happened to Abercrombie & Fitch. It still bounced off lows. Got a little 9% bounce there, but very, very weak overall. All right, as far as the S&P 500, you got 24% of the S&P 500 above the 50-day. You remember just the other day, it was on Friday, it was at 3.3%. I point that number out because that's a way to measure extremes on both sides there. And so we're back to 24%. People just keep buying the bottom there. You got 5 new highs in the S&P. You got Campbell Soup, which we covered already, so no need to go through that again. And then you had some utilities getting the award, one of the awards for recovering pretty quickly here. WEC Energy back to new 52-week highs, added 7%. And AEE, Ameren, hit new 52-week highs as well. 32 new 52-week lows, 12 of them closed in the red, so that's not too bad. Dollar Tree, one of them, Kohl's, Macy's, Under Armour. We don't have to go through all of them. Some of these, like I said, the lower tiered retailers that have been struggling continue to struggle, hitting new 52-week lows. And although they did finish off their lows, things like American Airlines, United Airlines, they did poke to new lows, came off of that and did participate today in the overall rally of the market. Norwegian Cruise Lines did not. It did finish lower on the day, but off of its lows, a little bit of buying pressure there. Still lost about 2% on the day. Okay, that's what I have for that. As far as the presidency, you've got the current betting odds that Vice President Joe Biden will now win the nomination. 79.7% chance of winning the nomination. And as far as winning the presidency, the current betting odds have shifted quite a bit. President Trump, 56.5% of re-winning office there. And Vice President Biden, 34.2%. That's up 16% overnight. So obviously he had a good showing there. And because of that, the betting odds have changed. After hours here, we've got Zoom reporting earnings. The stock is now down $5. Down $5. $5 on the day. Let's see. $5, where is it at? 111. Can I pull it up? 111. That's basically down 4% on the day there. Yeah. They beat on earnings too. I mean, it was basically an earnings beat, but that's what happened with Zoom if you happen to own the stock. All right, tomorrow you got more retailers reporting earnings there. You got BJ's Wholesale, Burlington, Kroger, Costco, H&R Block. Costco and H&R Block will report after the close. You got 3 Fed members out there speaking tomorrow as well. expect to see that pick up. Remember, when things get a little shaky, all the Fed members scatter out all over the world and they do their speeches and go talk and share the good word with everybody. All right, dividends and splits. Dividends, no splits. So you got dividends today. Kimberly-Clark, $1.07. Lincare, 96 cents. Pepsi, 96 cents. Royal Caribbean, 78 cents. A much-deserved 78 cents there. Waste Management, 55 cents. And C.H. Robinson, which is CHRW is a ticker symbol, 51 cents on the day. I'll take a chance here and try to answer some of your questions if I can, and we'll see what happens here. What was the volume like today? Oh, you mean the you mean the volume overall. So about average, well, slightly above average volume today for the S&P, if you're looking at that. Yep. Looking at Disney, you like the bounce there. I think, or you like the idea of a bounce. So I think I'll keep the same stance on that. It's early to tell, but new CEO expected to keep everything the same, keep that same sort of vision that Bob Iger had. We'll see. Also, yesterday, the new Mickey's Runaway Train opened at Hollywood Studios. Just saying, pretty cool ride. I don't know. I like that stuff. Little trackless system. You like become part of the cartoon, and they did a really good job of making you feel like you're in the cartoon there. Some pretty cool technology there. But I don't know how that translates to earnings. I know I'll go ride it. So we'll see. Thoughts on Costco? Do you reduce your overall holdings? Costco's doing well. So you look at this stock relative to other stocks that have yet to get back to 52-week highs. That's an impressive recovery. So if it were me, I don't think I'd be saying I want to run away from this one so much. I'd enjoy this holding for recovering so quickly. So I don't have any issues there. You want to buy Smile Direct Club on the dip? All right. Ricardo's saying this thing's going to bounce. Yeah. Do you think we'll test the lows? I think today is one of those days where people maybe got a little overexcited. Nothing changed. And remember, the effects of this virus haven't even shown up in corporate earnings. Granted, they've lowered expectations, they've lowered earnings guidance and everything, but it hasn't even shown up yet. So we really don't know what's going to happen because of that, and of course election season. I think you're going to see more volatility. I do not think, and will continue to say, I just don't think we go all the way back to highs again as if this never happened. That would be the first time in history that that's ever happened if we had like the world's shortest drop in terms of time and then had the world's shortest recovery. Super odd that would happen. I don't see it happening. Yep. Where do you see the next 2 days? I actually wouldn't be surprised if we chopped around a little bit. You know what I mean? I don't think it has to be a monster down day, a monster up day. I think people have positioned, rebalanced, and made decisions in the short term. I think unless there's some news we just don't know about yet, I think we see a little bit of chopping around back and forth. That'd be my best guess, actually. Yep. You want to get back to 298? I think there are people on both sides of this one that are saying, hey, all right, if we go up here, I'm going to look to sell because I've got this loss or whatever. I think you have the same thing on the downside where people are saying, oh, man, if we just get back down there, if we can have a down day, I would buy. I don't know about 298 in the next couple days anyways, but I guess anything's possible. Yep. I think April will be a volatile month due to earnings. Yes, I do. Yep. Delta up over 5% today, all of them, even though United kind of held back a little bit. All the airlines got a little bit of a boost today. It was one of those market rallies where everybody just felt like, okay, I could pretty much pick anything. We didn't see that on Monday. Remember, it wasn't just buy everything. It was very selective. Today, it felt like more people were just saying, okay, get me back into the index funds that I ran away from. And those index funds, when you buy them, they got to go buy all these stocks. So they can't be selective and only pick tech or whatever. They have to buy the index, just like their mandate describes. I don't really have any thoughts on Bitcoin or anything like that. It's been pretty quiet over the last couple of days. Not much there. That's not a good sign, by the way, where you see that inverse correlation normally to the market. Didn't see that on this last pullback, and now the markets are starting to bounce and Bitcoin isn't. That shows people are probably interested in investing in other things for the moment, but I don't claim to be an expert there. Yeah, I would expect Costco volume up overall. Probably same with Walmart. I could expect that, yeah. What's the noise in the background? It's a windy day. there's like a pressure thing on the roof. So when it gets really windy and there's pressure builds in the building, the little flap opens up, and we can't get up there. Otherwise, I'd get some WD-40. But it's really high up there. If you ever saw the video of me putting this studio together with the scissor lift, I'm never doing that again. I'm not going that high. UTX, yeah, a lot of the defensive names, they're just a broad rally there, right? Back to the 200-day moving average overall. A lot of these areas in this space did well. Raytheon as well, just a broad sort of sector recovery there. Yeah. I think you're going to see people sell the rally. Yeah. I mean, the only thing that gets people to not do that is if tomorrow's another 600-700 points, the day after that, then you have people going, all right, this is not so bad, I can handle it. But if we start chopping around here the next couple days, all those people that have losses or want to get out of positions are likely going to start making that decision. So we'll see. We'll see what happens there. Overall, I think I've covered everything I need to cover for the day. I do appreciate you guys stopping by. If I helped you in some way, hit the subscribe button or the thumbs up button, whatever you got there. It helps us out. I do appreciate that. And you guys have the rest of your day. Be a good one. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose JazzWealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.